TradeRationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. A few minutes past the top of the hour here, September 26th. Happy birthday to Liam. Happy birthday to Liam. I thought I was in pretty good shape this morning, doing lots of journaling and getting spent actually most of yesterday afternoon shopping for birthday cakes and presents and stuff for the boy. But sometimes the market, even though you can do all the work and all the preparation and boom, you still have like a beautiful setup that fires. But you end up getting stopped out. And unfortunately in this game, oh boy, you got to really be careful of revenge trading, getting angry and stuff at the market. I mean, if anything, today for me and what I sort of journaled today was actually I was very pleased at process goals. So I did very, very well on the process goals and actually made note of it. Followed process goals well, took my short on legit setup and it failed, was stopped appropriately for $150 loss in the sim and the combine. And I'll come back and fight again tomorrow. It's some days you just have these kind of days. It's kind of sucky that happens on Liam's birthday. But I got to try and stay positive. PMA for the win and all that kind of fun stuff. Actually, I'm kind of pleased to see we have Eddie back in the fold. He said he got lost in Tanzania there the other day. Lucky if he got found. Yeah, we got Zug in the hangout with us and Glass Insight. Not quite sure what that person's name is, but either call him Mr. Glass or Mr. Insight, depending on your temperament. As for the market, I mean, it's kind of interesting in these kind of environments to have to do these sort of daily reports. Oh, look at that. I'm getting it. This was another sim trade that I took here. Chris and I were actually, here's a really good example of revenge trading because we were kind of thinking maybe there was a top here and then maybe, they're going to, run the stops and then break it down. I had a little 3-bar empire. Certainly not going to trade this in combines, but did do a sim trade and you can see, I might go 0 for 2 on the old sim here today. But anyway, it is a trader's life. Live by the sword, die by the sword. What's interesting is to have to actually do these videos, sort of talk about market commentary and all that kind of stuff while actually having to book losses. I mean, it's really easy to do this game when you're just knocking the cover off the ball and banging out wins right, left, and center. It's tough to do this when you're either looking at a potential loss or have actually booked a loss and the last thing in the world you want to do is talk to the public. But anyway, it is what it is. I chose this life, and so got to be the demonstrator of best practices. If anything, today's a great example. I'm going to be the demonstrator of how to lose money effectively. Well, we don't want to lose money. What the hell, man? All right. Anyway, normal routine. What do we do? As I said, I thought I had a pretty good setup there this morning. But nonetheless, sort of demonstrator of best practices was up at 5. Really weird sleep, but as you note, Liam's birthday. What happened in the world overnight? Global stocks kind of weak, generally speaking. Did see some funny little comment about China. Trying to put on sort of best faces at what's the news headline here? I was reading where the hell was it? Of course, and half of my problem is I try and wing this and never goes well. Anyway, I did see an article here that China is trying to sort of be a good Asian participant. I think it's like the Asian Games or something like that. But at the same time, too, they're not backing down to anybody. And they're still being a little bit kind of bitchy with their neighbors. And, Winnie the Pooh is doing all his fun things. Interesting. I don't know where the heck. Oh, you know where? Actually, it should have been on AP right in here. But I don't see it. Maybe it was from this morning. Here we go. China goes on charm offensive at the Asian Games, but doesn't back down from regional confrontations. It was actually interesting because I have been talking to you guys. I think the whole market has sort of pivoted on what's going to happen out of China. And we potentially had an outside upside key reversal there on the Hang Seng stock market. This is the cash market. I think I had said to you before that if we looked at things like the stock ETFs over here in North America, there really wasn't anything of note here. Key reversal wise, it was more just the indexes themselves. And then if we look at this, this happens to be this guy over here is the S&P China ETF GXC. Yeah, that doesn't really look very bullish. Moving averages down, momentum down. So it was an oddity there late last week, but it did perk my attention. Some people were kind of like, "Hey, Brian, did you see this?" But if anything, I think in the video that I made yesterday, I pointed out that this sets up actually a really interesting bull bear battle line sort of confrontation level, if you will. Key reversals, one of the reasons why I love key reversals is the trade only triggers on a move through this key reversal bar high. That was 18,078.69. So for simplicity purposes, 18,079. And if we go through this low, because this is basically a bearish harami inside bar, and actually this is actually harami, that is actually a sell signal if we go through 17,722.49. So what I just simply said was if we go through 17,722 even, then the bears are in control, and it sure looks like the bears won. I don't think this really set up a trade per se for me, but this definitely does look trend continuation. And those kind of news headlines, I think they sort of speak to the temperament. I also noticed too, and it's interesting because our Tuesdays around TRI, today is Tuesday 26. It's Liam's birthday. Happy birthday, Liam. La 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 la. But Tuesdays is also Panacook Day. And Sjord is reporting in from I think the pool barbecue. He's barbecuing Panacooks today. I don't know. Maybe yes, maybe no. So we'll have an interesting conversation with Sjord shortly here once I'm done my little daily recap. But remember, yesterday I was talking to you guys. I think it was in the free video, but it might have been in the after party. We kind of dissected what this Apple chart looked like and how there was a hell of a lot of FUD going around in Apple. And some guy was reporting that some young guy, cream of some young guy, I think it was. that's an old joke. That's like a dad joke from like the 1980s. Anyway, people were reporting that the Chinese government had outlawed the use of Apple equipment. But then Mr. Sjord here is reporting that actually Apple equipment is selling like hotcakes over there in China. Oh, how many pancake puns can I throw in here? Anyway, point of the matter here is you can see Apple went and just cleaned out through these lows. Was that on a function of the Chinese selling and that Hang Seng outside downside, or actually I guess it was an inside bar fail, bull bear battle lines? I don't know. I think you could actually make the argument on this Apple itself, not a key reversal. And actually, this is really important because I had somebody yesterday on the Bitcoin chart call key reversal, but you have to understand, and I hope you're listening to this, mister, you know who you are. A key reversal, the market must open completely, like open up completely outside of the previous session. So and that's including wick. So you can see here, we did not open up outside of this range. So you can't talk key reversal. Having said that, you can see this candle body is above this candle's body. It opened up higher than the body and it closed down below the body. In fact, actually 2 previous days' bodies. So from the purest candlestick chart pattern aficionados, this is what's called an engulfing bar in candlestick land, and it is a very bearish signal. It's interesting how the market gapped lower the following day, did rally back up to give you the opportunity to short that engulfing bar if you did want to. And now you can see trend continuation working our way lower here. Did you do the trade? That's up to you. I think for the longest time, we've been sort of talking about how there was just an absolutely beautiful short setup on Apple way up top here. Coming in and shorting this here, if anything, kind of like what you saw on that Hang Seng market, A, B, C, D. Hopefully you can see the similarities. I think you can make the same similar study off of Apple now. So things like A to B, and then clone that, C to D. And it looks to me, and the big question yesterday was, do we break through these lows? Now that those lows have been broken, my hunch is the momentum here looks pretty nasty. And now I would feel very comfortable about painting a downside bearish objective somewhere down into that area. And if you wanted to trade this, kind of like what I showed you on that Hang Seng market, it would be, there is the bearish bot setup, has to rally at least 33%, but no more than 66. So as of this point, the bear bot is alive. Then we draw on our bot trade levels, probably, not backwards. And you can kind of, actually interesting to see, because this looks exactly like the Hang Seng. Remember our Hong Kong sell was on that doji candle right there. Ah, what a surprise. There is the 25. So the sell level on this Apple trade looks to me to be that outside downside engulfing bar, and then the counter trend rally back into that 25 level. And of course, now we have 3 lower highs to work with. And you've probably heard me say this before. What are we supposed to think if we see the market smiling at us, right? So boom, down we go. Also, too, it's September. So I've counseled you guys repeatedly. I mean, everybody should hear Brian's voice in your sleep. September is historically the worst performing month in the stock market. Quite often crashes happen in the middle of October. There's a lot, of course, U.S. Government fiscal year-end issues. How ironic. The fiscal situation is so bad in the States, they may have to even just shut the government down because they just can't pay their bills. So, it doesn't surprise me that we're getting weakness here. And as I said, I mean, we had an epic, almost historical top up top there. There was just the most beautiful trade location, indicator confirmations, price structure, and see you later. And I'm noticing that continuation is across the board. So if we look at the big index ETFs, the NASDAQ 100 now has confirmed this huge smile. So we were wondering yesterday if Apple could hold these lows, and that low there was 354.71. Today's low 354.59. It's not by a huge amount, but nonetheless, that liquidity pool was tripped up, and that's of course on the big tech stocks. On the S&P 500, and I'm so proud of Zach. He's such a fucking boss. Our TRI Secret Options Formula Club and Secret Options Formula Club members, because it is Liam's birthday, I won't be able to participate in the meeting tonight. That doesn't mean you guys can't meet. It's just unfortunately, I mean, you know where my priorities are. Liam's my life. So Zach is actually short the S&P 500 through a bear put spread, and he's just rolling in the dough, son of a gun. So congratulations, Zach. He actually, and it was through a Secret Options Formula Club meeting. It's very tough to go and buy options on this ETF that's $400. I mean, it's ridiculous expensive. So we went and we sifted through and we found a S&P 500 ETF that's I think it's 1/10 the size of it, and he's actually short this trade, short the S&P through a bear put spread trade, everything that he teaches in the level 4 program. So I'm so proud of Zach. He's such a boss. And I'm so proud to have him on the team. So way to go, Zach. You rule. And of course, are key reversals valuable? If you subscribe to TRI and you got this notification because key reversals are the boss, would you have had the balls to actually take that trade? And of course, there's the end result. So I think that this, like this one trade here could easily pay for the entire year's subscription of the dashboard. And that's sort of the value that we really want to try and impart heading into this November Black Friday sales event. Is that, we have the tools that will highlight these trades. And we're going to give you an offer that we think you just can't refuse. And actually, I was quite pleased. I asked for the community to give us some feedback to talk a little bit about the pain that they're experiencing in the market and how maybe TRI can help you with that pain. And actually, we've had a better part of 40 responses. So I think we have a really good sort of feel for what the community is going through and where they see value at TRI. And I'll say, getting lots and lots of comments, we love these key reversals. So, I mean, this image in itself is the absolute perfect sales pitch for this. It's such a beautiful trade. Anyway, it is what it is. What are we supposed to be doing here today? In this free video, of course, we got lots of bearish price action. I want to talk a little bit about that China trade because I think, to all intents and purposes, the market's still focusing in on the shit show over there and sort of the fallout across the board. We probably also, too, should check in on Econs and what do they sort of suggest for sort of our path going forward here. The breadth indicator, this S&P 500 breadth indicator was absolutely spot on. And actually, in the after party yesterday, I went through and we looked at things like the Dow Industrials. I mean, absolutely perfect signals. What I will say for those people that do follow the breadth indicator for things like crypto, my feeling is you should probably take signals that are in conjunction with the S&P 500 signal. So, bearish signals on a crypto breadth seem to work quite well. Bullish signals, wow, the S&P 500 looks like this, and not so much. But nonetheless, this was absolutely invaluable to give you a major warning sign that, markets are just not happy. And we've got to see the breadth indicator start looking like this and getting bullish crosses. Hopefully everybody can see the W here on the fast moving average here from an oversold condition. This is what we got to see for us to get bullish again in the stock market. And frankly speaking, I don't know when that's going to happen. And given, looming government shutdowns and China, Winnie the Pooh, and of course, I read, of course, that Vladdy's murdering a whole bunch of people around Odessa and stuff, even people, Romanians. I don't know whether you saw, Eddie. Now the ferries that are going back and forth between Ukraine and Romania are getting targeted by these Russians. So they just have no conscience whatsoever. Anyway, it's a tough, tough world out there right now, folks. Go slow. Remember preservation of capital. If anything, this is a really good example where, if you're going to take a trade, clearly articulate where you're going to enter, where you're going to risk to, and obviously, if the trade works in your favor, where you're going to take profits and stick to those levels, because revenge trading is probably just going to end up in just making the situation so much worse. And actually, that was one of the feedback points that we got in this survey. And by all means, I don't know whether here it is here. If there's anybody else who'd like to fill out this survey, I'm going to throw the link back in the lounge. If you haven't filled it out already, feel free to add your comments and your points. A lot of responses that I got were, well, Brian, before I knew you, man, I used to revenge trade like a son of a gun. And I had no clear idea of what was good behavior in the marketplace. So at the very least, hopefully Brian is just sort of articulating, work with a plan, trade setups. If you don't like getting stopped out, then just adjust your risk management strategy. That's what the whole point of the little old lady approach is. And just understand, general message from Brian right now, you've been hearing this all along. Don't fight the Fed. So to that end, what did we have coming down the pike today? Econ wise, well, we got a whole bunch of econs. We had new home sales, and we had, in fact, actually, it'd be better to show you the whole thing here. If I actually looked and just do the basic news, actually there was a bunch of econs, things like Richmond Fed, coming in fairly strong. Look at here's the Fed manufacturing index coming in way above expectations. Dallas Fed survey actually coming in basically in line with expectations, maybe a little bit less. And this is what really shocked me. House price index, they were expecting 2.9%, came in 4.6%. How the hell is the Fed going to cut rates in the face of that? There's no way that they can cut rates in the face of that. Home prices actually ticking up when the market was expecting home prices to go down. Month over month home price index, basically in line with expectation. Johnson Redbook, of course, we've talked lots about this in the past. This is Mr. Stanley Druckenmiller's favorite read. And basically, through that whole sickness nonsense and the way that the Fed just stuck their head up their asses and just acted like complete amateurs managing the money supply. I've shown you, go look at my tweets. I mean, it's embarrassing what they did. Mr. Druckenmiller, and retail sales went through the freaking roof. And Mr. Druckenmiller's like, why are you destroying our economy? So the point of the matter here is this is supposed to be somewhere, what does the Fed want? Ideally, somewhere around 2%. So it's still coming in almost twice what would be sort of acceptable at 3.8%. Again, how on earth is the Fed going to cut rates in the face of that? They're not. There's just no way they can. So, I put it all together. The Econs coming out today. It doesn't support lowering interest rates. Building permits up 6.8%. No way the Fed can cut in the face of that, or the housing market's going to go absolutely insane again. So I think that's another reason why the markets are pretty sanguine today. Here is, you're not going to get any help out of the Fed right now here in the short term. And of course, if the Chinese nonsense is still going on, then it's probably going to drag things like these tech names down quite a bit. So, happy, joy. Half of the reason, Brian, we don't listen to you is because half of the time you're negative and you're, just a big wet blanket. Yeah, great. I suppose we should finish off with good old corn. Weekly price, not really doing a hell of a lot. We're really stuck in a trading range here. And unfortunately, algos, right? They don't really act very well in trading range markets. They can often get chopped up. And as I had sort of said to you earlier, you get algo bullish signals while the broader market looks like crap and we're stuck in this trading range. It doesn't surprise me that they're floundering. Was noticing that, oh, hey, look at this. Maybe I might even get my short off. We had, manually speaking, and actually this would be interesting to see. I mean, maybe this thing blows higher here and I get stopped, but had, in fact, actually, I'm not even in. Oh, maybe no, still, order's still working. So a couple days ago, we had, of course, bearish bots fired and market dumped. 3 high-low method. In fact, actually, for the level 3ers, we'll be doing this topic today. How to use the 3 high-low to try and keep you in trades as long as possible. I thought it was interesting on this one. They did run up. I had my stop against these highs, so we got stopped out. And then notice slowly overnight, they go and carve out a new top. And this often happens where, maybe the market was pointing higher, but quite often the market will actually go and roll over at almost exactly the same level that you basically got out at. So 1 high, 2 highs, 3 highs, 4 highs. I've got plenty of highs to risk against if I want to hunt another bearish bot, A, B, C, D. So I'm starting to think, maybe 25,000 or 25,700. And of course, we have said repeatedly that downside support does look like it's around 25,000. So I am thinking that this market's going to grind its way lower, but, live by the sword, die by the sword. I showed you I got stopped out on a crude trade today. You got to trade. And actually what's interesting about that crude trade is the setup was perfectly legit. It's just got stopped out. It's the way it goes. So a little bit of red on the crypto scene this morning, today. Did notice there's some bright spots. Actually, Zug here is on the call with us here. his little name just looks beautiful down here. So, I actually went and bought the sold halves on doubles, reloaded on 78.6 retest. If we can get a rally back up through these highs, then I'm laughing. Right now, it's humming and hawing, but yeah, interesting. I even posted in the lounge yesterday that if you weren't in this thing and you wanted to do a little bit of nibbling, this name's looking really interesting down in here. Like if we do reload zones, boom, 61 page, 78.6. And, there's no reason if you did want to join this party, you could just, you can see the double bottom. It's kind of a sloppy double bottom, but no reason why you can't do things like reload zones. And maybe you're going to get a reload zone within a reload zone kind of idea. And candle body lows for trade location. I'd keep a close eye on this one. And of course, our community OGs, they seem to really like this name going forward. So, internally it's setting up nicely. I don't know whether there's any fundamentals going on here, but this is definitely one I would keep a close eye on. So I did notice that overnight. I haven't seen a hell of a lot else that has really got my attention. I am going to be going very slowly here in the risk market until at the very least we get out of October and maybe into November, December. But I also do expect one more swoon in the crypto space, Bitcoin, all that, sort of the beginning of the year, setting us up for the halvening event in the spring. And actually, we should actually have a really, really good buying opportunity there in maybe like, I don't know, we'll call it the dead of winter, middle of February. Usually there's some really great buys. So keep an eye on November, keep an eye on maybe mid-February. We'll see if there's those will be my next two buying windows for things like little old lady plans. Okay, that's about everything for today. It's not really the most optimistic. Well, optimistic, what I would just simply say, the optimist, there was a gentleman on the site who said, Brian, let's maybe try and concentrate on more positivity. So, what I would just simply say is, it's opportunity now here. And if you don't want to take the risk of maybe getting stopped out, you want to just go and nanny nibble your way in. Don't risk more than 5% of your portfolio on these kind of names. Because down the road, in about a year or two, my hunch is we're going to be back up top here. As just one example. There's tons of them you can go through this space that look like this. And, probably a really good anecdote. I don't really like to show you guys too much, but, and this is why I justify the site membership. Don't really have a lot of sixes. And of course, it probably would be a behoove you to pay attention for sixes. But we're getting a lot of fives in the crypto space, which means that they're down at the bottom end of the range. And we're just waiting for that momentum turn. So, pay attention. Maybe opportunity is now here rather than opportunity is nowhere. Just go slowly as we get through this September-October window. All right. Have yourselves a great day. PMA for the win. Come and join us in the after party show for some poolside pannacooks. And let's check in with Sjord and how things are going on over there in Europe. Have yourselves a great day. All the best. Wish Liam a happy birthday. And bye for now.